Preparing for a SAP FICO Consultant at Accenture interview. You've reached Candy Mentor, and this video is for you. We'll walk through 20 key questions you're likely to face. For each question, you'll see a sample answer, followed by the key points to cover. Subscribe, like, and share, and drop a topic request in the comments. Question 1. Can you walk me through your SAP FICO project experience and your role? I would explain my experience by project lifecycle. For example, I worked on SAP FICO implementation and support, covering general ledger, accounts payable, accounts receivable, asset accounting, cost center accounting, and basic profitability reporting. My role included requirement gathering, configuration, unit testing, UAT support, defect resolution, documentation, and user training. I also coordinated with SD, and ABAP teams because most FICO issues are integration-driven, not isolated finance configuration issues. While answering, focus on project type, SAP version, modules handled, responsibilities, deliverables, client interaction, and measurable outcomes. Accenture interviewers expect structured communication, not just a list of transactions. Question 2. What is the difference between SAP FI and SAP CO? SAP FI is mainly for external financial reporting, while SAP CO supports internal management reporting. FI captures legal books through general ledger, accounts payable, accounts receivable, asset accounting, and bank accounting. CO tracks costs and profitability through cost centers, internal orders, product costing, and profitability analysis. The two integrate when expense postings in FI are assigned to CO objects, such as cost centers, so management can analyze where costs were incurred. Make sure to cover external versus internal reporting, statutory compliance, management decision-making, key submodules, and how FI and CO integrate through postings, cost objects, and reconciliation. Question 3. How do you configure a company code in SAP? A company code represents the smallest legal entity for which full financial statements can be prepared. I start by creating or copying the company code, then assign it to a company, country, currency, chart of accounts, fiscal year variant, and posting period variant. After that, I maintain address, tax settings, document number ranges, and field status variants. I validate the setup by posting basic vendor, customer, and GL documents. In your answer, talk about enterprise structure, company code creation, assignment to company, fiscal year, posting period variant, chart of accounts, field status, and testing basic postings. Question 4. What is a chart of accounts, and what are the different types used in SAP? A chart of accounts is the structured list of GL accounts used for recording financial transactions. In SAP, the operating chart of accounts is used for daily postings by company codes. A country chart of accounts supports local statutory reporting, and a group chart of accounts supports consolidation. In global implementations, I usually see a common operating chart to standardize reporting, with local mappings added where legal requirements differ by country. Be sure to mention operating, country, and group chart of accounts, their purpose, account assignment, consolidation relevance, and how global templates are typically designed in large consulting projects. Question 5. Explain the procure-to-pay flow and its impact on SAP FICO. Procure-to-pay starts with a purchase order, followed by goods receipt, invoice receipt, and vendor payment. From a FICO perspective, goods receipt usually debits inventory or expense and credits the GRIR clearing account. Invoice receipt clears GRIR and creates vendor liability, including tax where applicable. Payment then clears the vendor open item through bank accounting. The key control point is reconciling GRIR, because quantity or price differences often create business disputes. While answering, focus on purchase order, goods receipt, invoice receipt, GRIR, vendor liability, payment, tax, integration with and common reconciliation issues consultants investigate. Question 6. Explain the order to cash flow and its accounting entries. Order to cash begins with a sales order, then delivery, goods issue, billing, and customer payment. The sales order itself usually has no accounting entry. At goods issue, inventory is credited, and cost of goods sold is debited. At billing, customer receivable is debited, while revenue and tax payable are credited. Account determination comes from SD pricing, customer, material, account assignment groups, and condition technique. So FI must align closely with SD configuration. Make sure to cover sales order, delivery, goods issue, billing, customer receivable, revenue recognition, COGS, tax, SDF, I integration, and how account determination happens. Question 7. What is automatic account determination in SAP FICO? Automatic account determination means SAP selects GL accounts automatically based on configured business rules. In OBYC uses transaction keys, valuation class, account modifiers, and valuation area to determine accounts for inventory, GRIR, price differences, or consumption. In SD, revenue accounts are determined through condition technique. This is critical because users should not manually choose technical accounts during integrated transactions. Wrong setup can post inventory, revenue, or expense to incorrect GL accounts. In your answer, discuss why automatic postings matter, OBYC or SD account determination, transaction keys, valuation class, account grouping, and how incorrect configuration affects financial postings. Question 8. What is the purpose of the GRIR clearing account, and how do you analyze open items? GRIR is a temporary clearing account used when goods receipt and invoice receipt happen at different times. If goods are received first, SAP credits GRIR. When the vendor invoice is posted, GRIR is debited and cleared. Open items usually arise from missing invoices, quantity differences, price differences, or reversed receipts. I analyze GRIR by vendor, PO, material, and aging, then coordinate with procurement or AP before using corrective transactions like MR11. Be sure to explain goods receipt versus invoice receipt timing, clearing logic, common causes of open balances, aging analysis, MR11, and coordination with procurement or accounts payable teams. Question 9. How do posting keys and document types differ in SAP FI? Document type controls the overall accounting document, while posting key controls individual line items. Document type determines number range, account types allowed, and document classification, such as vendor invoice, customer payment, or GL posting. Posting key determines whether the line is debit or credit, and which account type is allowed, such as vendor, customer, asset, or GL. When troubleshooting, I check both, because an error may come from header-level control or line item restrictions. While answering, focus on document classification versus line item control, debit or credit indicator, account type, number ranges, field control, and why both are important in troubleshooting. Question 10. What is a fiscal year variant, and how is it assigned? A fiscal year variant defines the financial year structure, including normal posting periods and special periods. It can match the calendar year, like January to December, or follow a non-calendar year, such as April to March. The variant is assigned to the company code and affects postings, reporting, and period-end close. In multinational projects, different legal entities may use different fiscal years, so reporting design must consider consolidation and local compliance. Make sure to mention calendar versus non-calendar fiscal years, posting periods, special periods, company code assignment, year-end close impact, and examples relevant to multinational clients. Question 11. How do you handle a client requirement during fit gap analysis in an SAP implementation? I first clarify the requirement by asking for the business process, frequency, users, controls, and reporting need. Then I map it to standard SAP functionality and identify whether it is a fit, configuration gap, process change, or enhancement. If customization is needed, I document the business justification, functional specification, integration impact, testing scope, and approval. In consulting, the key is not saying yes quickly. It is protecting standard design while meeting business value. In your answer, talk about requirement clarification, standard SAP mapping, gap classification, business impact, configuration versus enhancement, documentation, sign-off, and Accenture-style consulting discipline. Question 12. What is field status variant and how does it interact with posting keys? Field status variant controls which fields are required, optional, suppressed, or displayed during postings. It is assigned to company code and linked through field status groups in GL master records. Posting keys also control field status at the line item level. SAP combines both controls, and the stricter rule generally applies. For example, if a GL requires cost center but the posting key suppresses it, an error can occur. Be sure to cover field control at GL and posting key levels, suppress, optional, required settings, conflict resolution, cost center example, and relevance in accounting document errors. Question 13. Explain asset accounting integration with general ledger in SAP. Asset accounting manages fixed asset transactions while posting values to the general ledger automatically. The asset class controls number range, screen layout, and account determination. When an asset is acquired, SAP posts to the asset balance sheet account and vendor or clearing account. Depreciation is calculated by depreciation areas and posted to expense and accumulated depreciation. In S/4HANA, asset accounting is more tightly integrated with the Universal Journal, improving reconciliation with GL. While answering, focus on Asset Master, acquisition, depreciation, retirement, asset class, account determination, reconciliation with GL, and changes in S/4HANA asset accounting. Question 14. What is a cost center, and when would you use an internal order instead? A cost center tracks costs for an ongoing department or function, such as finance, HR, or IT. An internal order is better for temporary, specific, or project-like tracking, such as an office renovation, marketing campaign, or legal case. Cost centers usually remain active continuously, while internal orders can be budgeted, monitored, and settled to cost centers, assets, or profitability segments. I choose based on whether the business needs permanent responsibility reporting or event-specific cost control. Make sure to compare ongoing responsibility centers with temporary or event-based cost tracking, settlement, budgeting, reporting needs, and practical examples from consulting or corporate finance. Question 15. How does SAP FICO integrate with MM and SD modules? SAP FICO integrates with NM through procurement, inventory valuation, invoice verification, and vendor accounting. Goods receipts, invoice receipts, and material movements create accounting entries using OBYC configuration. With SD, billing posts customer receivables, revenue, tax, and sometimes COGS through account determination. Master data like vendor, customer, material, tax code, and valuation class drives postings. A FICO consultant must understand integration because many finance errors originate from logistics configuration or master data. In your answer, cover end-to-end business processes, automatic FI postings, account determination, master data dependencies, reconciliation, and why consultants must understand integration beyond their own module. Question 16. What are the key differences between classic SAP ECC FICO and SAP S/4HANA Finance? The biggest S/4HANA Finance change is the Universal Journal, stored mainly in ACDOCA. It combines FI and CO line items, reducing reconciliation between subledgers and controlling. S/4HANA also uses new asset accounting, business partner for customers and vendors, and stronger account-based COPO. Reporting becomes faster and more granular because financial and management accounting data sits in one table structure. For consultants, this changes design, migration, and troubleshooting approaches. Be sure to mention Universal Journal, ACDOCA, new asset accounting, account-based COPA, business partner concept, reduced reconciliation, and real-time reporting benefits. Question 17. How would you troubleshoot a payment run failure in SAP? I would start with the payment proposal log because it usually explains why an item was not selected or paid. Then I check vendor master data, payment method, bank details, payment terms, due date, currency, payment block, and open item status. If master data is fine, I review company code payment configuration, house bank, ranking order, available amounts, and forms. The goal is to isolate whether the issue is transaction data, master data, or configuration. While answering, focus on systematic diagnosis, proposal log, vendor master, payment method, bank details, due date, open item status, house bank, payment block, and configuration. Question 18. What is data migration in SAP FICO, and what controls would you apply? Data migration moves legacy finance data into SAP, including GL balances, vendor and customer open items, assets, cost centers, profit centers, and bank data. I focus heavily on data cleansing, mapping rules, load templates, validation, and reconciliation. For example, vendor open items loaded into AP must match the GL control account balance. I prefer multiple mock loads before cutover, with business sign-off on totals, samples, and exception reports. Make sure to cover master and transaction data, templates, cleansing, mapping, trial load, reconciliation, cutover, sign-off, and controls over opening balances and subledger accuracy. Question 19. How do you approach testing in an SAP FICO implementation? Testing should follow the business process, not just individual transactions. I begin with unit testing for configuration, then integration testing across procure-to-pay, order-to-cash, record-to-report, and asset processes. UAT confirms that business users can execute real scenarios with expected accounting results. I document test scripts, expected entries, evidence, defects, and retest status. Strong testing is especially important in FICO because one configuration error can affect financial statements and compliance. In your answer, discuss unit testing, integration testing, regression testing, UAT, test scripts, evidence, defect management, business process coverage, and collaboration with cross-functional teams. Question 20. If a client disagrees with your recommended SAP standard process, how would you handle it? I would first understand why the client wants a different process: control, regulation, reporting, user habit, or a true business constraint. Then I explain how the standard SAP process works and what benefits it gives, such as lower support effort and cleaner upgrades. If the gap is valid, I present options with risks, cost, timeline, and integration impact. I would document the decision and get the right approval, rather than forcing a solution. Be sure to show consulting maturity, listening, understanding business rationale, explaining standard SAP benefits, assessing risk, offering options, documenting decisions, and escalating constructively when needed. If you are still with us, congratulations, you are much ahead of the rest and serious about preparing for your interview. We hope we were able to add value to your preparation and create some helpful content. Do not forget to like and share this video. Your small act can do great things for us.